I think the market's already starting to price some cuts. I'll give the answer to the Fed, which is they're going to be data dependent. But based on what we're seeing around the world, you would indicate that there's probably more danger on the downside for the economy than on the upside. And I would also like to add that 2.2% is actually more reasonable to the trend of the expansion that we had seen, meaning like 3.5 was probably actually running through too hot, right? I think 2.5 could actually last longer as an expansion. 3.5 based on productivity, based on, in essence, demographics, doesn't really justify unless policy changes.
I thought it was interesting that Clarida said this morning that the U.S. could, I forget the language exactly, suffer a downturn that started with the rest of the world. Do you believe that? Because it's not a very open economy and it's rare that happens. And he might not have put it that strongly. Yeah. He was talking more about the risks, but...
I think the U.S. is like this big tank. It takes a while for it to get going, but then once it gets going, something external has to be pretty big for it to actually derail it. So I think if we hit a recession, it's probably going to be self-inflicted, right? Yeah. Either sentiment drops and therefore affects consumption, which is 2/3 of GDP. So I don't necessarily think what's going on in China would be the reason why we would hit a recession.
How many rate cuts, Steve, are economists or the market pricing in now for this year?
So I don't have an official number on that. We have our percentages of our CNBC Fed survey respondents, of which Joe is one. Thank you very much. And I believe it's 15% of the 43 we surveyed in the last survey said that they expect to cut this year, jumping to 35% in 2020. Wow. I will say it is fascinating to think about how the parameters of discussion has shifted. As far as I know, Joe was the only wild man. What, a couple weeks ago or so, you started talking about January about a rate cut. Okay, everybody, Lavorgna's crazy. Okay, and I kind of thought that too. I think that anyway, but that's another reason entirely. Okay,
I appreciate it.
But most people were like, is it going to be 0 cuts or 1 cut or 2 cuts? Now,
or a few hikes.
Now Joe is in the middle, kind of. Yeah. We got another guy, Chris Srebke, this morning at MUFG. Has reported he thinks 3 rate cuts over the next 14 months.
He might end up on the Fed board if he keeps up that kind of talk.
That would be a qualification.
Kelly, the one thing I want to add, just as Steve was saying, is if you look historically, well, that may be the case, okay. But depending on who you talk to. But if you look at the last 5 cycles, the time from the last Fed hike to the first cut on average is about 7 months. Now, it's been lengthening. It was 15 months in the last cycle, but it's on average 7 months. If this economy evolves like you were saying, where growth slows into the 2s, I think it's a bit less. And you talked about Asia, or rather overseas activity. I mean, you get into this notion of stall speed when the economy is below 2%. It's vulnerable to a shock, which makes it different than the past. But you could lay out the scenario where this could be a pause that refreshes if the Fed cuts a few times, stabilizes growth expectations, and we rebound next year.
How soon are we talking, do you think, for a rate cut?
Second half of the year.